Good morning and welcome back to Almus Market Mornings. Investors often look for confirmation bias. Let's take, for example, the tech stocks in the US. They were trading at stretch valuations, post which a series of corrections started hitting them. So, any logic or information that further gives a perception of stretch valuation will create more selling. That's exactly what happened yesterday after Citrini Research published a report on the world in 2028 and the disruptions caused by AI. It's widely being talked about and causing a lot of uncertainty for SaaS companies. Apart from this, the tariff-related uncertainty continues. Geopolitics plays in the background. Broadly, dollar is trading stronger. Gold blasted off once again above 5,200, only to cool off, and since then it's been trading below that. Good morning, JK. What are you reading from the current set of moves and developments?
Good morning, Swaraj. Yeah, I think the tech stocks have been under fire quite quite a bit of late, and the report only adds to the bearish sentiment in the market. Technically, also we have seen that the recoveries have been overshadowed by larger falls. And I think yesterday's move perhaps set off much more downside. Of course, markets will wait for NVIDIA results, which is due in a day or two, and that any negative report there can set off more selling as well. And surprisingly, more than the tech stocks yesterday, the Dow Jones, the broader economy stock represented, also fell, more than 1.5%. And I think surprising is that it's not carried over into the Asian market much. Japanese market some time back was actually in the positive. So it's more specifically to the valuations in the US market rather than other markets. And if you look at even Indian market, it has not really participated in the rally that was seen in many emerging markets. And that's also because the Indian stocks are still perceived to be overvalued. So I think markets will, of course, watch out for more selling and how the sentiment evolves. That actually is also determining how the dollar will be approached as well. Yes, apart from that, I think there have been quite a bit of statements from Trump on tariffs, and that has actually kept the markets on the edge. So Trump has actually said that Supreme Court has actually and unwittingly given him more powers and strength than before the ruling. That is his interpretation, of course. He would use the 150-day period to work on issuing other legally permissible tariffs in which he also pointed to the potential use of licenses to pressure the country. So that's a more telling statement. So I think markets are again perceiving more uncertainty now after the initial reaction to the Supreme Court ruling also. Then of course we have had geopolitics, which is not cooling off. The U.S. State Department is withdrawing non-essential staff and families from U.S. Embassy in Beirut as well. Apart from where Iran also, they had given similar instructions earlier. There are many countries who are doing the similar actions to safeguard their citizens, and which means that some sort of action is imminent. This is happening even as the nuclear talks are going on between the two countries. So I think markets are suddenly faced with a lot of uncertainty, and even the monetary policy seems to be at crossroads. Quite a few Fed members recently have talked about the sticky inflation, and even some of the few dovish members like Stephen Miran and Chris Waller have pointed to jobs report being stronger, and they have slightly shifted their dovish stance to the hawkish stance as well. So multiple challenges for the bulls. And I think this is going to reflect in the lower prices in the coming days, and that could be a good healthy correction for the market as well. Now, market is also focusing on the SO2, the so-called SO2 rather, the State of the Union address by Trump, which is later in the day or early hours for Indian time. Apart from the economic situation, Trump is obviously possibly likely to say about future policy pronouncements. Definitely, his words on tariffs going forward will be very closely watched by the market also. Uh, on the dollar itself, it's in a range, of course. USD yen is moving between 154 and 155. Not so much moved by the risk-off sentiment in the US markets. Some investors are still selling the yen because the doubts about rate hike in April still persist. As far as the euro is concerned, slightly heavy long position is weighing on the currency. Therefore, the moves above 1.18 are not being sustained. Sterling is pressured because there is almost a certain chance that they will be cutting rates in March as well. And the commodity currencies are under slight pressure because you have the risk sentiment, which is not so positive. And gold, silver, obviously the gainers. And there also, if the markets get into a much larger sell-off mode, then you could see a profit taking in these metals as well as people look to book profit elsewhere when they are incurring losses in the stock market. On the rupee, as expected, the Supreme Court decision of lowering the tariff rate, or rather the lower tariff that followed the Supreme Court decision, did not help the rupee much. 90.70 was very strongly, protected because of import buying. And we are almost near 91 once again. That is where we were trading before the Supreme Court decision came on Friday. I think rupee will trade with a slight negative bias. Of course, market is also talking about large value maturities in the offshore market or the NDF market, which is likely to come up for a rollover, and how the RBI acts in this situation, whether the buying will spill over into the domestic market or not, and if so, whether RBI will offer dollars is something that the market will be looking at. But generally, in the past, these types of positioning or accumulation of positioning actually resulted in rupee weakening more. That is something what the market is positioning itself for. And I'm also slightly watching the finance minister's words, who is also equally surprised that the economy being where it is, a robust picture, has not really goaded the global investors to bring in money for investments into India. That is the FDIs, which is underperforming totally. So I think no major bullish news for India from the investor point of view. So that should keep the dollar rupee in a range for some more time. Thank you.
Thank you, JK. And yes, couple of things to watch out for. The State of the Union address by President Trump for future policy guidance. On the other hand, geopolitics, it isn't cooling off. US State Department are withdrawing non-essential staff from Beirut because of the US-Iran tensions. And apart from that, broadly currencies remain in a range. Gold, silver are the broad gainers. Rupee did not get any assistance from the lower tariff rate due to the decision. But once again, trading closer to now rupees 91. Offshore market expiries will be the added pressure on rupee. That's it from us today. Thank you for listening. We will catch up tomorrow with a fresh round of updates.